Ladies and gentlemen, back here with part 2 of the Q&A video. Part 1, we answered questions about the Bitcoin top, about whether altcoin season could continue beyond the Bitcoin top like it did in 2017, and whether Bitcoin could reach these very high price targets like 500k, 350k, whether it could break the 4-year cycle. All of these things were addressed in the last video, so check that out if you're interested. But today we have even more topics to cover, posted by you guys, of course. We've got my take profit strategy, how I take profits, how I enter, what I think about dollar cost averaging. I've got a very controversial opinion on that you'd probably like to hear. How much of your portfolio should be allocated to Bitcoin in the broader scheme of things, where I think Bitcoin dominance will go in this cycle, what I think about daily and weekly cycles. So we've got the 4-year cycle, then we've also got the daily cycles and the weekly cycles, like the time of the day that the US markets open. That brings an influx of volume. The day of the week, depending on certain circumstances, can have impacts on the price action. What do I think about that? And finally, we have a question. What do I think the bear market will look like? And I'll actually give you a potential price target for the bear market low in 2026 if everything goes to plan. Before we dive into it, let's take a look at the Bitunix exchange. It's a global exchange. You can access it from anywhere in the world. It's never been hacked before. Not a single security breach in 4 years in the market. An excellent track record. That's what you want, because you're trusting exchanges to keep your money safe and you're paying them money and fees while you do so. And with that said, you can get a 15% trading fee discount attached to your account for life with my referral link, which you can find in the description and pinned comment below. So use that link to sign up, get that trading fee discount, help out the channel and help out yourself. And the final thing I mentioned before we dive into it today, click the join button on my YouTube channel homepage and you'll see the Wolves of Crypto VIP membership details. If you want altcoin trading signals posted 4 times a week exclusively for you as a VIP member, you can get them. It's a 77.8% win rate. I've been doing it for 3 years. I've tracked that win rate in a publicly accessible document right there in that link. And that's not all. You're getting a bunch of other perks, which you can take a look at on the screen right now. Without further ado, guys, I won't take any more of your time. Let's get into the video. What is my take profit strategy? My take profit strategy in bull markets, and I'm just going to tailor it to bull markets, and it actually does apply past bull markets. It applies to short-term price action as well, is I generally like to take profits not at specific preset price targets. I take profits when breakdowns occur. I'm a breakout trader, and for that reason, it also means I'm a breakdown trader. So for example, back here at the bear market lows, I was publicly saying, I'm not trying to brag or anything, it's just a great example. I was publicly saying for months on end, we would probably find our bottom at around the 17 to 16K price region. That's what I said publicly. You can go back and check it. But most of my buys did not occur. Even though I said the bottom was likely in, most of my buys did not occur until we broke the neckline at around the high $17,000 region and broke upwards, because that was validation for my theory. My theory was the bottom was in. I didn't have confirmation for it. The confirmation came when we broke to the upside, and that gave me justification to buy. In the exact same way with taking profit, over here at around 32K, I was saying this was a significant top right here in July 2023. We double topped there. I thought it was a bad situation. And so I put a short-term target for a breakdown. And when that short-term target was reached, I sold my positions, bought back when the breakout occurred. Okay, so I generally like to take profit in the same way I like to buy, when breakouts and breakdowns occurs, when confirmation occurs. So if this was actually a bull market top, for example, which again, I don't think it is, but if this was the bull market top, and let's say hypothetically, I was convinced of that. I was convinced we were bearish here. I was convinced we're going to enter a bear market, which again, I'm not. It's hypothetical. I wouldn't just sell right here. I'd wait for the necessary structures to break down that would validate my theory. That's what you need to be doing, in my view, with taking profits and also with entering. I use this analogy a lot, and I think it's a great analogy to use. When you're a trader, you're almost like a detective with a theory. You think the victim has been killed by a certain suspect you have, but you don't have the evidence. You need to gather that evidence before taking them to court. Okay, that's what you're doing when you're trading. You think something might happen. You think the market may go up or down, but before you can act on that intuition, you have to gather evidence to justify an action. And I suppose I've actually indirectly answered the next question too, for a lot of it at least. What is the good entry strategy for crypto? Well, it's what I said before, right? Breakout confirmation is required. to validate your theories. You might think the market is going upwards, but until you have evidence to actually act on that, you're not justified in acting on it. So waiting for the breakout for validation is a good way to do so. But the second part of the question is unique. It's a question about DCAing, right? Is DCAing a good way to enter the market or exit the market? Well, it depends what you mean by DCAing. There's two kind of variants of DCAing. Dollar cost averaging, of course, which is basically the strategy in which you kind of just buy at multiple price points and hence get an average price. So say you buy 25% here, 25% here, 25% here, 25% here, and then you've got your average price around here, right? Now, people, when they're talking about DCAing, generally what they mean is, okay, I'm going to take 10% of my money, 10% of my income, and I'm going to put it into Bitcoin regardless of the price. I'm not even going to look at the chart. Every Friday when I get paid, I'm just going to put the money into Bitcoin. I'm just going to buy it and leave it. I don't think that's smart personally. I think that if you're willing to risk such a significant portion of your income on an asset, you need to at least have the knowledge to know where that asset could be going in the future. And I think to some extent, DCAing is gambling for a lot of people in that regard. Don't just blindly buy, okay? You're risking your money here, right? If you're risking a significant portion of money, you can do better than just blindly buying, okay? So yeah, you can DCA in the sense that you can buy 25% when this breakout happens, 25% when the next one happens, right? Sell 25% to de-risk a little bit, but do it at strategic times, okay? And it really doesn't take that much knowledge of TA to know when to strategically buy and sell based on macro price action. It's very clear, okay, when Bitcoin has this formation right here, for example, a clear channel formation, clear, I mean, clear as day. Anyone can look at that and see it, right? When that channel breaks outwards and we start breaking highs, it's obvious that that's a buy signal, right? For you to sit here throughout that entire correction and buy every single Friday, I think that's just a little bit lazy in my view, right? Buy when the charts say to buy. And I don't think you really need that much knowledge or time or attention on the market to, make that analysis. Personally, that's me. So DCAing as a strategy, if done correctly, is fine. You can buy small increments at different price points. Just make sure you're justifying it with the data. I don't necessarily agree with this whole put $10 in every Friday. It's like, come on, do a little better than that. You may as well just go to the casino. But I understand that's a polarizing view. And I understand people who think they don't have enough time are probably going to take offense to that. But I think that, if you've got money to spend and risk on financial markets, you should make the time to actually know what you're buying. But that might come across as patronizing. I apologize if it does. That's just my view. Question here about how much Bitcoin I think should be allocated into an investment portfolio. Well, of course, to an extent, I can't answer this because I don't know your circumstances, and investment portfolios are highly circumstantial. But as to whether you should go heavy in Bitcoin or not, just consider a few things. I mean, this is an asset class that can drop upwards of 80% in a bear market. So it really depends on your goals. And I think that if you're investing in Bitcoin and putting it in your portfolio without knowledge of things like the 4-year cycle, you could end up investing at very bad times. And although, yes, investment portfolios are for the long term in a lot of cases, if you're buying right here in the October 2021 top, it's going to be a solid 3 years, 2.5 years until you're at break even. So I think that, no matter how much you decide to invest into Bitcoin in your overall portfolio, at least know the cycle, because that could be the difference between you being at a loss for 2.5 years or not, right? So do I think that buying Bitcoin right now for the long term is a good idea? No, because we're towards the end of the cycle. I think that would just be historically just not smart. It is still a volatile asset. It is maturing, of course. Diminishing returns is taking place. But even with diminishing returns, I mean, we're still upwards, 600% in the last 3 years on Bitcoin. That's a lot to be upwards, right? And that could dramatically, push your portfolio in different directions if it is not adjusted accordingly, if the risk analysis is not done correctly, and if the weighing up of what assets you have in your portfolio is not done correctly. It needs to be in accordance with your goals, and it's important to know this is still a volatile asset class, and there are still things to know about this asset class, like the 4-year cycle, which could prevent you being in a very bad position for multiple years. Where do you think Bitcoin dominance will bottom out this cycle? Well, as I've said before, many times in this channel at this point, but as I've even said in this video, I think the Bitcoin dominance and altcoins in general are doing badly this cycle. I don't even think that I know that. It's a fact, okay? Let me just draw this out quickly for you, okay? There's generally been, not generally, every time, 324 days exactly, however, has been how long altcoin seasons have lasted. And conveniently, and it's not a coincidence, they've been timed exactly to last that 324 days, exactly until the Bitcoin top as per the 4-year cycle. That happened in 2017, it happened over here in 2021 as well, 324 days until the Bitcoin top. That's when Bitcoin dominance roughly bottomed. That hasn't happened this time, right? And the cycle top is, as per 4-year cycle, probably going to be around October, November. It's not certain, but that's what the cycle says. If that was going to be the case, if we were going to see that Bitcoin dominance regular cycle, it would be, it would have had to start back here in November, but it's over here in June and we're still going upwards. So it's definitely an overstatement to say we're going to see an altcoin season like we've seen before. That just doesn't seem to be the case, even in the sense, even just definitionally, based on definitions, like we've seen before, that those words would mean it's comparable to what we've seen before. We already know it's not going to be, because we know that the trend that existed, which was 324-day altcoin season, topping out with the cycle, that's broken, right? It would have had to start occurring here in November, and it didn't. So it's not going to be like we've seen before. And given the fact that altcoins have shown significant weakness, it's probably going to be a lot weaker than what we've seen before. I still think it will happen, because that's the way money flows in cryptocurrency. But as to where Bitcoin dominance could go, I don't think that's really relevant, because we can just kind of pick up on that along the way, right? As we get closer to the cyclical top in October, November, or even if the 4-year cycle does break, right? As we get the breakdowns on Bitcoin on a macro scale, it doesn't really matter where Bitcoin dominance is, because we're not selling in relation to Bitcoin dominance. Bitcoin dominance is literally just a metric we use to know whether altcoins are outperforming Bitcoin or not. It's not something you sell or buy based on. But if we're being highly speculative, it wouldn't probably, in my view, wouldn't go lower than 50%. That seems reasonable to me. If we see a regular cycle, that is. If we see a break of the 4-year cycle, literally anything's possible, because we'd be in the dark on a macro scale. But I see a very, very major support zone here at 50%, 49%. I don't see us going below that. And at this point, we've got 5 months left of the cycle. Even getting to that could be a little bit difficult. With that said, we have seen Bitcoin dominance drop downwards very significantly in a small period of time before. Only took about 4 weeks, 5 weeks for Bitcoin dominance to drop down from 71% to 36% in 2017. So it's very difficult to actually know. It just straight up is almost impossible to know. But yeah, I think around that 50% region, you're probably talking rationally. Outside of the broader 4-year cycle, what are your opinions on daily and weekly cycles? A lot of people talk about that. I don't think it's relevant. I think it's definitely true, definitely is the case. At certain hours, you see spikes in volume, like when the US market opens. Certain days of the week are more influential than others. Obviously, weekends, Saturdays, Sundays, there's less retail traders in the market, less institutions at work, and hence less people trading in general. You see less volume. It's really all to do with volume. Everything's to do with volume. And I think that if you are over-analyzing and thinking, oh, I'm not going to buy because it's a Thursday, you're looking at it the wrong way. Breakouts are when you should be buying, right? As I've established before, I'm a breakout trader. And breakouts occur when there are volume spikes, which will generally happen at the right time of the week or the day, because that's when the volume comes in. So I think you are over-analyzing it personally if you're looking at the weekly and daily cycles. Look at the structures, look at the patterns, look at the volume. Generally, they're going to line up with the daily and weekly cycles without you even caring about what they are. Final question here. I don't know much about the first part of your question. I'll just answer the last part. What correction are you expecting in the bear market? Well, as per diminishing returns to the upside, I expect diminishing returns to downside. If Bitcoin was to top at, let's say, 130,000, that's not my prediction. It's just a hypothetical situation. We saw, 86% drop here in 2013, 84% drop here in 2017. We saw a drop, I believe it was only 77%, 78% in 2021. But there's a clear downward trajectory in those angles, in those steep corrections, right? We're not going down as much as we did in the first cycle, in the third cycle, and that trend should continue, assuming diminishing returns continues to the upside, which it would have to continue to the upside unless Bitcoin went to something ridiculous, like close to 1 million, right? There would be some degree of diminishing returns. Then we're probably going to see diminishing returns to the downside, right? Something like 70% flat would be something that I would expect. Now, let's just assume, and this is an assumption, let's just assume we top out at 130K. We would go downwards. We would find our bear market low in late 2026. As per the cycle, that would be a 73% correction, and we would correct downwards to something like 31,000, right? So there's an exact potential target for you if everything ends up remaining as is. Before we wrap up here today, just another look at the Bitunix exchange and BIP. Bitunix is global, non-KYC, accessible from anywhere in the world, and a 15% trading fee discount is available with my referral link down below. It's never been hacked before. This is the kind of exchange you want to be on, and I'm saying that as a trader who is not getting paid by them. I'm simply getting a referral link. So use that link down below to sign up if you're interested. Help out yourself and help out the channel. And again, I'll mention the VIP group. Click the join button on my YouTube homepage and you'll see all the perks pop up right there. 4 trading signals per week, access to a VIP group chat, and much more. If you're interested in that, check it out. Thanks, guys. Have a good day.